Hey, good morning, everyone. This is your boy, Jadon Jackson, down here in sunny South Florida. Today, I want to talk to you about real estate. I've been hearing and looking at a lot of different opinions of people talking about the direction in which they think the real estate market is going to go. First and foremost, I'm not a licensed agent nor a broker, so anything I share with you today will be strictly my opinion and advice on my personal opinion on what did I do as far as from the last housing crash in 2008 up until today. Um, I own numerous properties throughout New York City and now down here in South Florida. And I'm not a contractor or nothing like that. It's just someone that's interested in real estate. I have a love for real estate. And I know it's a lot of people out there that want to know, like, outside of a professional opinion, because first and foremost, nobody could predict what's going to go on in the future with the market. I can have my opinion of what's going to go on, but it's nothing written in stone. The thing with the real estate, we'll get into it later on, but I'll just tap on it briefly, is inflation. The feds have to calm down the inflation, meaning that before, about a year ago, you saw that interest rates for real estate, for mortgages, was like, if you had stellar credit, you could get in the twos. If you had like borderline social credit, you was in the high threes, probably fours, depending on your down payment. Now the interest rates is pushing near 5.4, 5.5 now, and you could just imagine if you don't have stellar credit. The FHA is good and it's bad. I think in this type of market, it's bad because you're locking in yourself to a overall long term fees. Because what it was before, FHA will work out is if you had 80% or more equity, then you would no longer need the FHA. But now, if you don't have the equity in your home, then you keep paying your PMI every month, and sometimes the fees could be four, five, six, $700 a month, which gets pricey if you think about it over the course of a loan. Now, from my understanding, FHA is throughout the life of the loan, so the only way you could get out of that is to come up out of FHA mortgage and go conventional. And then that's where it start getting tricky because now they want probably more down payment because of the interest rates and the price of the house. So now you have to pay more. So now, as far as that is concerned, purchasing in this type of market, in my opinion, strictly, strictly, in my opinion, I think you shouldn't purchase now. And reason being, we'll keep simple numbers. So let's just say a house costs you $200,000 and you go and purchase today. So now, let's just say 4 or 5 months from now, the market corrects itself. And now they say that $200,000 house you bought back in February, mm-mm, we only think it's worth $150,000. So now you purchased the house for $200,000 in a high interest market, and now you can't even refi because in order for you to refi, they're going to tell you, you know what, you have to come to the table with about 50 or more $1,000, not including fees. So that right there wouldn't make sense. The purpose of refinance is to save money, not to spend money. But so now that $200,000 house you bought today would be worth 150,000 later on, and then now you can't refi out of that interest rate, and the interest rate might go up, might go down, but let's just say they go down. You can't get that great interest rate because the house is not worth what you paid for it. So you're like underwater, as they say in the mortgage industry. So your house mortgage is more than what the house is worth. So no bank wouldn't touch that and refi. And I'm positive that's almost has nothing to do with your credit because as a bank, they still have to look at everything as an investment. Is this a good investment for the bank? So with that being said, I think you should wait. I think you should play out what's going on. I see rates going down. What happened in 2008 is that people started getting panicky. The houses was going up, 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 and people started purchasing, and then the crash came. And nobody predicted that, because back then, especially if you're just a homeowner, we're not talking about investors and it, but strictly someone that just wanted to purchase a property. Prices was going up, up, up. People was purchasing them. It was some shady deals that added on to that. It was people purchasing more than what they can afford, but they just started purchasing, purchasing, purchasing. And then when the bottom dropped out, you had all these banks holding all these mortgages that was worth nothing, not even a piece of paper it was written on. So that's mainly was the issue the last crash. Now they put more stringent borrowing um, requirements in, but it still can't. It could deter, but it still won't totally be the resolution to what's going on, because people could still go out there. You have investors, you have people that want primary residence. It's not so much of people scooping up two and three in homes and using one house to pay for another. But even if you have someone that's purchasing a house that's more than what they perceive the market to be, because the market don't lie. Your house is only worth what the house across the street is worth, and that's the sad truth about it. You could put diamonds on the doorknobs and gold in the sinks. It's only worth what that house across the street is selling for, which is the sad truth. I know we purchase properties and we want it to be worth X amount of money, but the market don't work like that. That's the one thing. I have a saying, like a child won't lie, because they just say what's on their mind. So the market is going to tell you what that house is worth. You will not get more than what the X amount of more than, if the house across the street is going for $500,000, it's highly unlikely you're going to get $1 million for your house. Especially same square footage, same everything. It's just where it is. It's just, that's just how the market works. So as going forward, as far as the inflation, you have to understand that people was purchasing a lot of property at a fast rate when the interest rates was cheap. That hurts the economy. I know it might feel good that everybody is purchasing and everything is booming, but now everything is going up. Now we get hit with COVID, which was unprecedented. So after the pandemic, people, the government printing out a lot of money to stimulate the economy. Some say it's good, some say it's bad, but it was a ton of money. I think it was over a trillion dollars to stimulate the economy. So people started purchasing properties strictly off of thinking that, all right, this won't never stop. I'll keep getting money forever and ever, and this will pay for it. So I can't afford this without the stimulus, but I'm going to buy it now because the stimulus is not going to stop. And then boom, stimulus stopped. So that put people in a situation where now they're having problems paying their mortgage, because it's a lot of default that you haven't even seen hit the market yet. That's another fear, that these people that was purchasing properties during the pandemic because of the stimulus, now they can't afford this straight up. You have to remote. A lot of jobs are laying off people. So if you was remote and you went somewhere, let's just say Florida, sunny Florida, nice, beautiful down here. If you went somewhere like Florida, you came down here and you thought that you would have a job, you get paid a certain rate, but down in Florida, it would be good for you to, live, because it's cheaper and stuff like that. But then now you get laid off. So now what happens to those people that was renting? Or what about the landlords that owned it? Now the renters can't pay, so now they can't pay. It's like a Trimble effect. But I think it's going to be a correction. I think that the Feds is going in the right direction, only because I say that in order for us to get control of the whole market, it has to correct itself. It can't just keep going. It will spiral out of control. I mean, at the high point, properties was going $60,000 or $70,000 over asking, which was insane. It was just crazy. But if you like what I was talking about, please hit the subscribe button, ring the bell. If you have any comments, please don't hesitate to ask. Like I said, I'm not a licensed real estate broker, nor am I an agent. I'm just someone that owns properties. investment primary and stuff like that, and I just had to put my opinion in there because a lot of things that I was hearing, it was just some I agreed with, but a lot I didn't. And I'm sure there's a lot of people out there the same thing. So this was like a 101. See you in the next video. Thank you very much.